Central Bank of Nigeria has held interest rates at the Monetary Policy Committee. Third time this year, 27.5% benchmark rate. All parameters held in place at its meeting that concluded yesterday, July the 22nd. Let's listen to Governor Cardoso talking about sticky month-on-month inflation and the geopolitical issues that are still plaguing the world, which is causing the CBN and MPC to be cautious.
Members observed the uptick in month-on-month headline inflation, suggesting the persistence of underlying price pressures. The continued global uncertainties associated with the tariff wars and geopolitical tensions could further exacerbate supply chain disruption and exert pressure on the prices of imported items.
All right, our business analyst Chika Mbonu joins us to look at the decision and also other parameters around monetary policy in Nigeria. You're welcome, sir. Thanks for joining us.
Good to see you today.
Good to see you. I'm fine, thank you. Hope you're good as well. Yeah. So, what do you call the decision?
I mean, actually, really, there wasn't much to expect. A lot of analysts actually believe that they were going to hold.
Yeah.
Even though some people thought that, like as has always explained whenever I come on air after MPC meetings, each time the meetings hold, the MPC committee, the Monetary Policy Committee is always confronted with three decisions: either to hold, to increase the rates or reduce the rates, as case may be. Yeah. Let me just use a very flat language. Let me not use a sophisticated language, and. The key rates that are under consideration are usually at the monetary policy rate, which is the benchmark interest rate in the economy, and the cash reserve ratio, which is the idle cash that central bank serializes in the banks to help monitor liquidity in the system, and of course the liquidity ratio of the banks, and then in Nigeria the asymmetric window, which plus 500 to slash 100. Yeah. And so those are the key things. What do we have, or what did we have, what is the extent of the economy at the time this meeting was being held? One, we've had inflation moderating. Yeah. Then we had also the GDP results that came out and show that the GDP has increased. Yeah. We had a rebasing of our GDP also. So much has been in the flux this week. Yeah. We also had a situation where the exchange rate has stabilized, and indeed the official market and the so-called parallel market are actually almost coinciding, coming together. And so we have some stability in the FX rate. And this, I remember, the inflation triggers in Nigeria. Yeah. Inflation has been the major economic issue that the central bank has faced, and principally driven by interest rate. You know that the way they have, chased inflation in Nigeria has been to increase interest rate, and they have been pushing the monetary policy rate upwards. Now inflation is moderating. The expectation was like, and then before I go to that, that the higher the inflation, the more expensive it becomes for people to borrow, right. And it affects output, manufacturing sector, and so on and so forth. It becomes expensive for them. The economy cannot expand. Yeah. At the same time, so the higher the interest rate, the more it helps to moderate inflation. Right. So each time you're faced with the decision, should we run in inflation or should we reduce interest rates so that the output will increase? So we look at the lesser of the two evils, and the one is the inflation. So the environment, supported holding the interest rates as it is. Let the policies existing simmer. Let's see how the impact of the policy existing. And moreover, the global environment has seen interest rates rising, and then we're going to watch what is happening there. And Nigeria has had issues of, it has been very good for us in this period, where a lot of, FPIs have been, coming to Nigeria, and which provided the stability. And then remember the most important one. I keep telling you here that Nigerian economy is not sophisticated to analyze. You want to analyze Nigerian economy, what do you do?
Just
check oil. And then you look at oil production. Oil production has been stable and has been inching up.
Yeah.
And so all those provided some stability for the economy. So it's not surprising that rate was held as it is. Hoping that the next MPC meeting, which is in 2 months' time, what will happen. So we think that if the inflation continues to get down, get lower as it is, there's more stability in the FX market as we have seen so far. Maybe from the next cycle, MPC cycle, they may be forced to knock off some basis points.
Well, you prompted my next question. Okay, yes.
knock off some basis points of the multiple rate. But as it is now, they're going to hold on that. But you see, before I take on your next question, the issue is that, again, as I said, the manufacturing sector, the borrowers were expecting a moderation in the MPC multiple rate, because remember the borrowing rate now is about 30% effective, and that's really, really very high. But we take the bitter pills to make sure that the economy moderates, inflation moderates. Remember, as I said also in this program at the time, inflation tends to wipe out everything. If the inflation is run away, especially, and which was going to happen in Nigeria if you didn't, CBN didn't do what it did. And again, triggered off by the two things: fuel price increases and the dollar is the naira exchange rate. Inflation is going to go. So that's why the central bank did what it did. There are a couple of issues in the economy on that. One of them, of course, talking about this program also, is the cash reserve ratio.
You've prompted my next question. I already know what I'm going to ask you. So please touch on that.
It's cash reserve ratio that is held very high for commercial banks at 50%, and then for merchant banks at 16%. And the last report we did said about 46% of the deposits in the banking system is being centralized at CBN. But also that there are a couple of things that are conflicting. Banks have given minimum loan deposit ratios. So how do you go and box with your hands tied in your pockets, at your back? So it's going to be difficult. So, but once inflation is brought under control, it becomes easier for the economic parameters to be dynamited the way they're supposed to move. So those are the issues. So we're hoping that there's more stability. Nigeria the world economy is very funny. One bomb lands somewhere and something happens. One fight somewhere, something happens. It's just that, and the world oil doesn't thrive well for us when there's peace. We require some turbulence in the world politics to enable our oil prices to hold around $70, or which is good for us. So, but Nigeria is in the right direction. But the important thing for us again is that the fundamentals, we need to go back to manufacturing and the productive side of the economy. And all the initiatives must be geared towards helping the manufacturing sector, steamroll again. And interest rates getting lower, exchange rate stable, power systems, power stability solved.
You've predicted all my questions today.
Electricity solved. Security system for supply chains, managed, so that manufacturing sectors will kick up again. And this Buy Nigeria policy or the federal government of Nigeria, that we hope that they will implement it.
Buy Nigeria to grow.
Buy Nigeria, that happened. And starting from the people in power,
coming down. The jeeps and
the
so
jeeps
on
and everything. I don't want to talk about that.
I know, I know your mantra for the government, and it is a correct mantra. Arise, Business Analyst Chika Mbonu. As always, thank you so much for breaking this thing down for us. We appreciate it.
Thank you.